OG Bitcoin whales are dumping. This chart gives a good visual of how many super whales are cashing out of Bitcoin. All lines here are 7+ year on-chain spins from pre-2018 era OG Bitcoin holders, Edward said in his X post.
We are live. Welcome back to Bitcoin.com's The Weekly. I'm Graham Stone, joined by David Sensel from Bitcoin.com News. Let's get into the weekly recap of the biggest stories in the Bitcoin and crypto verse. Starting off with some price action.
Yes. Of course, we had a rough week. Everybody had a rough week, unless you were in Zcash. But for most people, it was a rough week. Bitcoin briefly broke below 100K 3 days last week. Each time it closed above this symbolic price level, but you had to be kind of holding your breath every time this happened. The kind of negative price action started on Monday, really got, I guess you'd say, heated up on Monday. On Monday, it was at $110,000 per Bitcoin. It got as low as $105,000 per Bitcoin, but it ended at around 106.5K. And so it was a rough day, but it got worse on Tuesday. For the first time since June 23rd, earlier this year, Bitcoin dropped below $100,000 per Bitcoin. It wouldn't be the last time this week or last week that this happened. It was down 6% within 24 hours on Tuesday. Just for some context and to show you how much can change in a month. On Tuesday, this was 20% below the October 6th record high of $126,000 per Bitcoin. Do you remember that, Graham? Do you remember those heady days of early October when it was at all-time highs?
Yeah, before Uptober was canceled.
Before Uptober was canceled, man. Why did this happen? Well, the drop was due in large part, or at least a big contributor, was the U.S. equity markets, specifically around AI. I would say there's kind of an AI scare right now, a lot of concerns that we're in an AI bubble, and the kind of sell-off in U.S. equities really precipitated, I think, or kind of spread into crypto markets. The NASDAQ plunged 486 points. The New York Stock Exchange lost 138 points. Even the S&P fell roughly 80 points. So it was just a difficult week for the U.S. stock market and specifically for AI. I don't know if you saw some of the news, but really I think Sam Altman kind of put his entire leg in his mouth, spooked a lot of people in terms of OpenAI's viability and thus the entire viability of the AI sector. Anyway, by Friday of last week, on social media platforms like X, crypto Twitter, CT, the beating heart of crypto, Bitcoin short began trending, and bearish sentiment covered the timeline. I think by this time, the reports of OG super whales dumping hundreds of millions of Bitcoin really was kind of mixed up into this narrative, along with U.S. equities. An investor and fund manager named Charles Edwards shared a chart showing the significant sell-off of Bitcoin by long-term holders. Quote, OG Bitcoin whales are dumping. This chart gives a good visual of how many super whales are cashing out of Bitcoin. All lines here are 7+ year on-chain spins from pre-2018 era OG Bitcoin holders, Edward said in his X post. Now, there were good rebuttals to this post. Willy Woo, who is, I think he specializes in Bitcoin data, he replied with this saying, many of the data points from this chart capture any movement in these holders. So, for example, if the holder moves to a new wallet or consolidates wallets or custodies Bitcoin, those are all captured as selling. And so thus it's not as dire, potentially as dire as it looks. I don't know
so
about
just
you.
As an example there, David, someone might be a Bitcoin whale might move their Bitcoin from self-custody to an ETF. And there's a lot of reasons that you'd want to do that. Basically like tax reasons, I think, are the main ones.
And safety as well.
Safety and tax. You can, because ETFs holdings can be used as collateral. You can, have them in there and get liquidity for other investments or lifestyle
That's
without
right.
actually having to sell your Bitcoin. Those types of transfers show up in the chart.
Yeah. Another example would be apparently a lot of these OG whales who have 20, 30, 40,000 Bitcoin, they start DATs, right? A digital asset treasury, and their Bitcoin becomes kind of the basis for this. They're not selling it. They're just using it as the kind of the basis for these new DATs. And so I think we had several announcements earlier in the year with like the Stripe one, and you had these whales putting in like 20,000, 10,000 Bitcoin in there, and I guess that would show up as selling, right? Because they're transferring the Bitcoin. So again, maybe not as dire as you'd expect, but still, I would say this is one of the more dominant narratives in the past, I don't know, 100 days is these OGs selling. And the price action of last week really kind of increased the fear that the OGs are exiting. As of right now, Bitcoin has kind of rebounded and it's well above the 100K mark. What are we at right now? Around
105.8.
Yeah. I would say this is probably in reaction to the Trump social media post talking about the $2,000 stimulus check or the tariff return thing that he's doing. And so you're seeing, I guess, anticipation of inflation and circa 2021 stimmy check madness. I think this is maybe short-lived though, but we'll have to see how this plays out over the next week or so. And that's been the price action. It was a pretty wild week.
Yeah. You think it's short-lived. A lot of people are saying, okay, no, the bottom is in. We're going to recover from here. And then also people have said, well, with all this whale selling and the price of Bitcoin kind of remaining flat, that's bullish because it means there are buyers. Bitcoin is changing hands. That amount of whale selling would never have been possible in previous markets. So that's a sort of counterpoint to the whale selling being strictly bad.
Yeah, I mean, it's when you have negative price action, every story, it's like, what do they say? The price action determines the kind of spin on the story. And so negative price action means every story can be spun negatively.
All right, let's move on. So we do have this interesting story, which is the renowned short seller, James Chanos, who's the founder of Knikos Associates. Sounds Greek. Has closed his short position against Strategy, which of course is the firm owned by Michael Saylor and known for its massive Bitcoin holdings. Chanos had been shorting Strategy since May of this year, shorting Strategy stock. And the bet was that the Strategy share price, which was then trading at 2.5 times its MNAV or modified net asset value, would eventually fall closer to the value of its actual Bitcoin reserves. And he was right. Strategy's MNAV multiple compressed from what it was at that time, about 2.5x, to now closer to 1.2x. And the price of the stock dropped by about 50% from its high. So the premium on its Bitcoin holdings shrank from 80 billion to 15 billion. Chanos, exited his trade. And that could mean that the short side on the MSTR stock has hit its bottom.
Well, I would say, though, in his note, he does specifically say, I still believe that it will go to par. It'll go to 1. But the juice of this trade, the easiest part of this trade is over, and he's going to let other people step in and get that last squeeze out. But he's moving on.
That reminds me, David, I heard a very interesting adage, I believe it was in the 1000S podcast, but where the guy's like, the guest was like, as a rule of thumb, let the market take the last 2x out of your trade. And just focus on that first 10x, whatever it is.
Nice.
Let the market deal with the last 2x.
Yeah.
I like that.
Yeah. I mean, I kind of agree. I think this will compress back down to 1. I think you could still see upside eventually, but it does seem like there's probably a little more pain left for MSTR holders, I'd imagine. But yeah, it's good that this major player has stepped out, right? So good.
All right, let's move on to the Stream Finance
Yes.
contagion.
Okay. This is the most interesting thing that happened last week, I think, because it really gets into the kind of the intricacies of DeFi. And it's just it's another one of these things where you see these kind of just crazy kind of, I don't know, Gordian knots of financial chicanery. So Stream Finance's stablecoin, I'm going to put in quotation marks, depegged last week. And basically this has kicked off a kind of devaluation of these yield-bearing stablecoins. About $20.43 billion of these stablecoins slipped last week, according to stablewatch.io. There have been lots and lots and lots of outflows as everybody is scared that their synthetic stablecoin will be next. This is after 3 stablecoins have depegged, starting with XUSD, that's the Stream Finance one, followed by, I believe it was DEUSD and USDX. Crazy, all these names. They all depegged, they're all done. This all started on Monday, I believe, when Stream Finance announced that it had lost $93 million in users' funds. And this is via their stablecoin XUSD. They said a, quote, outside fund manager lost the money. So, and also this outside fund manager, this is all off chain. There was no on chain transactions. The outside fund manager took the user's funds and then deployed it in some black box. We have no idea where. Most likely people think all the money was lost in the 10/10 October flash crash, right? So this is kind of your first body from that. So $93 million was lost. And from that, it's kind of rippled out and taken out these other stable coins. And these really are not stable coins. They're stable coined in name only. They're more like
they're synthetic
stable
coins, backed not by one-to-one holdings of US dollars, but by other crypto assets that themselves are volatile.
Yeah.
So, David, you posted this this tweet. Do you mind if I read this?
Go ahead.
Yeah. So it illustrates, as you note here, the ludicrous cross-platform, cross-asset looping. So here's the tweet. Elite Rings SCUSD is backed by VEUSD. VEUSD is backed by locked STKSCUSD. STKSCUSD is backed by staked SCUSD. That specific SCUSD is rehypothecated to Mithras. Mithras SCUSD, about 92% equals 13 million, is currently borrowed by XUSD collateral on Silo and Euler. So,
whatever that means. Yeah.
Seems reasonable.
And when you say it out loud, it really shows you how kind of crazy this is, right? Could you imagine saying this to a human? Could you imagine saying this to somebody who's not in crypto? Just like go to a friend and be like, "Hey, I'm going to say something." I think they would think you're putting like a spell on them, some kind of demonic chant or something like this. Some financial Harry Potter stuff, right? So yeah, you have all this stuff happening, and this is really, I think, shook DeFi participants. And we're still in the midst of the fallout to this. Are we going to have more of these assets depeg? Are we going to see treasuries empty out to like insurance funds, which then cause their own cascading problems? It's hard to know right now. We're still in the middle of this. It does kind of feel and look like a miniature version of the Terra UST kind of contagion that spread. Obviously, I don't think it's as bad as that, so I'm not trying to like make people scared or increase the contagion, but you do kind of have the same feeling of just all these people going further out and further out on the risk curve for what they consider safe yield, and it's turned out to be anything but safe. And so there's still lots of information coming out of this. We're going to probably talk about this at Token Narratives because it's far from done, but one of the coolest things about this, let me just say one thing, is I had a conversation with the co-founder of Redstone at Token 2049, and he specifically talked just about this kind of risk in that conversation. It was eerie. I went back and I listened to it. And one of their products is giving ratings to these vaults, to these yield strategies. because they're kind of like black boxes. And for market participants who aren't doing their due diligence, they just see a good yield and it's on stablecoins and they think, oh, this is safe. This is very safe, but it's not. And so they're making a product that actually goes into the guts of these vaults and figures out and gives them a grade from A to D plus or minus. So A plus, A minus, D plus, D, this kind of thing. And I think that's really going to be the next step, is to have ratings on these things to make it easier for market participants to decide how much risk they want.
When you go on a platform like Morpho and you look at the different options, right, you see that most of the total value locked, most of the participants are in vaults that offer reasonable yield, i.e. just a few points above the risk-free rate. So like a 4 to 5% or whatever, right? When you look at that, you're like, okay, there's still some risk there, but then you look further down the options and there's stable coins with 80% yield, or like vaults where you lock up stable coins, but it's not USDC or USDT that you're locking up. It's, I don't know, this long list of algorithmic or synthetic stable coins.
SCUSD. What's it called? Elite Rings SCUSD. I mean, what the heck is that? That's insane.
Yeah. So, obviously, the temptation is high to put your assets in those, but risks there are.
I think one of the other things that's going to happen is these vaults have kind of. I think that here's a marketing thing, Graham, for you, marketing lead at Bitcoin.com. They kind of like realized, oh, if you add USD to the name, it feels safer than what it is, right? Like, so if you, instead of calling it USD, if you called it like Elite Rings SC Trevi token, you'd be like, oh, that sounds really suspicious, right? Yeah. But you put USD on it and you're like, oh, well, this is a stable coin, so very safe.
Let's move on to some other stable coin news, not the
real stable coins.
The exotic stable coins, which is how they're labeled, by the way, on Stablecoin Watch, stablewatch.io. You have a category, exotic on chain. So that
still too nice, I think.
Yeah, your milk toast stablecoins, the one backed by U.S. Treasuries. Obviously we had the Genius Act earlier in the year being passed, and you're now seeing a growing list of countries looking to replicate that in their own jurisdiction. So let's just go through the ones that happened this week. First off, we have Saudi Arabia. Now, this hasn't happened yet, but there's a proposal basically to emulate what the Genius Act did. Make it legal, make stablecoins legal. They talk about cross-border payments, all the usual talking points. Canada, which, by the way, hasn't had a budget. The way the government works in Canada, you have to the government has to propose a budget, which then, if they have a majority, it's just a sign off. But if they don't have a majority, they have to form a coalition to pass the budget. So Canada, there was an election earlier in the year, quite a long time ago, that they haven't passed their budget yet. And so they've got this proposed budget, and in it, it's like, it's like in the US, like, I don't know, what do you call it? An omnibus bill or something. Everything gets put into one bill, right? In the proposed budget for Canada, there is talk of a stablecoin and a stablecoin bill. And let me just bring up the quote here. It earmarks millions in funding to jumpstart the crafting of US-style stablecoin legislation. So they're also going in that direction. And then finally, we have in Japan, the Payment Innovation Project, PIP is what it's being called. They've started an experiment, or they just started an experiment, involves some of the biggest banks in Japan, Mizuho, MUFJ, Sumitomo, Mitsubishi. This project is to test joint issuance of stablecoins to verify lawful and appropriate regulatory operational responses. So basically, we've got a series of countries following in the footsteps of the U.S., enshrining this regulatory approach that the U.S. has taken via the Genius Act around the world now.
So basically, the rest of the world trying to play catch up with the U.S. Yep. Good luck to them. Good luck.
Okay, let's move on to our last major topic of the week here, which is privacy. So, in sad news, David, could you
Yeah.
summarize this story?
Yeah, this is terrible, man. Pretty big blow to, I think, developers, builders. Again, one of many stories last week that I think made builders and developers a little dispirited. Two of the developers behind the Samurai wallet, which is a privacy-focused wallet, Rodriguez and his fellow developer, William Lonergan Hill, they were accused of running an unlicensed money transmitting business. And they handed I think the maximum sentence possible for this, which is 5 years. So these two devs are going to prison, for the crime of writing code for 5 years. This is bad for anyone in crypto who's writing software, and even worse for anyone in crypto who's writing software with a privacy focus. It sends a terrible message that the US government doesn't like privacy, I would say, and is willing to punish those who are making tools to enable privacy. They're making that a punishable offense. A bad turn. Again, we've talked about this before. I think this is a bit out of the administration's hands, right? This predates Trump and the Trump administration's, what's it called? Their when they took over. So this is like a Biden era kind of vestige, but it really is terrible, I think. And I don't know where to go with this next. I mean, it sets a bad precedent.
Yeah, I guess there's the chance of a pardon, but just to illustrate, one of the many reasons that privacy is needed in finance. All right, so we've got a story here, which is that some known cryptocurrency holders, a couple who was living in Dubai a few months ago, they were kidnapped and murdered, their bodies buried in the desert. And the update to this story is that the group of people who orchestrated that have been arrested by Russian authorities. So, yeah, that's one reason why privacy is needed. But others, we've talked about many times, basically, TradFi, finance, you cannot have, for crypto to really go mainstream, you must have privacy. Businesses have all of their financial data exposed. It doesn't make sense business-wise, and regulatorily, you're just like, businesses can't operate like that. So privacy is needed, and it exists to a certain extent in the TradFi system, in some ways to a greater extent than it does in like most of crypto.
Yeah, exactly. Like if you Venmo somebody money, they don't get to
the whole world doesn't see
your bank account,
your balance.
Yeah,
exactly.
Like,
all of your holdings. Right?
Graham is doing really well.
Yeah. So, perhaps as a response to this whole thing, there does seem to be this growing narrative, right? That at least amongst the investors in the crypto space, that privacy is needed, and therefore you have seen massive pumps in privacy coins. Zcash, perhaps the most notable, but now some others are following up. Monero, Xano's done well, and others, I believe Dash, Decred. They're all the privacy space. People are crypto investors have latched onto that narrative and are pumping the coins.
Were you heartened or disheartened that other coins started to catch a bid? Because usually that means, to me, the narrative might be getting a little fatigued, right? When you have that front runner really kind of going strong, and then once it starts to spread to all the other stuff, I think that usually is a sign of exhaustion, I guess. I don't know.
Yeah, I mean, the other thing is if you just look at the charts of some of these tokens, they start to go from diagonal up and to the right to parabolic up and to the right. Right? Yeah, it goes like, when it starts going like that, straight up, it's not sustainable. And we've seen that with Zcash. And sure enough, when Zcash really went parabolic, that's when you start to see people rotating to the other privacy coins to try to get that extra juice out of the tank.
Yeah, definitely. But good.
All right,
I'm
David.
glad.
Yeah.
It's a good narrative, privacy. So
Yeah. I think we'll talk more about this in token narratives either this week or coming soon. Are these privacy tokens actually investable? You mentioned, David, that there does seem to be some kind of a cabal here as well. And what is long term going to be allowed, I guess, by the powers that be?
yeah. I mean, like we talked about before we went live. There's a lot of different pieces to that, and it's not clear to me what the best solution is. I still think, just to give everyone a little taste, you deal with issues of fungibility with Zcash, and so we can get into that on token narratives. But it's the privacy is complicated, and it's complicated by the fact that you have, like we just talked about, governments who I think are incentivized to not like privacy, right? It makes kind of what they do harder, and I don't know if they're gonna let this go unchecked, but we'll find out.
Yeah, and of course the real crypto cypherpunks will say it doesn't matter what the government thinks, but David, I know you have qualms with that approach.
What have they been doing for the past 2 or 3 months? They've been selling all their tokens, so right? That's so funny. Oh, I love Bitcoin. Sell for $1 billion fiat. Yeah, okay. Yeah, I guess.
All right, let's end it there, David. Thank you as usual for your insights, and thanks everyone for listening. Have a great week. See you on Friday for Token Narratives.